Traders, Cousin Vinny coming to you from theclosingprint.com, March 28th, 2021. In this edition of your weekend video newsletter, we'll discuss the strength that showed up at the end of the day on Friday last week, with the S&P 500 and Dow Industrials leading, while IWM closed lower by over 2%. International indices were also red for the week, while big cap growth turned in a mixed performance. Tesla and Roku were both off 5% and 11.7% respectively, while Apple, Microsoft, Intel, Cisco, and Qualcomm all moved higher last week. Rotation continues with consumer discretionary, builders, materials, consumer staples, healthcare, transports, real estate, all moving higher, with lagging sectors, energy, industrials, and financials. However, they are improving. With regard to financials, you'll note that many of the stocks that are set up coming into this week are banks and financial services. In addition, the XLY-XLP ratio remains bullish. Additionally, you'll note there's a lot of stocks shown in the watch list area at the bottom of the monologue, as so many stocks have found support at recent lows, with stochastics turning higher, RSI moving above 50, and MACD crossing or near a cross with respect to observations made this weekend. So it should be no surprise that we have 18 bullish indicators, 1 is neutral, and 1 is bearish. Bukowski has 5 of 5 green, and his CPI signal is at 96.8%. That's bullish. I will note that when it reaches extremes like this, we tend to see reversals, so that indicator has me a little ambivalent about the strength that we're seeing. Most of the indicators are bullish, so we'll go with that signal for now, with the S&P 500 closing above that key 3,900 level last week. Resistance is still at 4,400 for the SPY, and the key remains VIX over the next 3 trading days into the end of March. SPY had a nice response to the 50-day moving average last week, with volume by price support in the same area, bouncing and following through on Friday, closing at the highs of the session with RSI above 50, volume above average, MACD crossing, and stochastics moving higher from the 50 zone. Looks good for this week to start. Looking at the S&P 500 without the weighting of those mixed performance growth stocks gives us the S&P 500 equal weight index. We can see that we're moving higher into the start of the second quarter. We have the number of stocks trading above their 50-day rising, and CCI giving us a signal reversing last week. So it looks like this trend could continue over the next 3 trading days. I'd be a little bit cautious, but into April certainly looks good, especially into the seasonally strongest months of the year, which tends to be the first half of each quarter, second quarter, third quarter, and the fourth quarter, of course, being about the same. We continue to have reason to believe the second quarter, starting April 1st, will have similar performance that we've seen in the past from a statistical point of view. The Nasdaq 100 performed quite well on Thursday and Friday, producing a higher low, looking for a higher high and a close above volume by price resistance and the 50-day, with RSI rising, volume above average, MACD above its signal line, and stochastics appearing ready to turn. We must get above the 50-day this week. IWM, small caps, the Russell 2000 remains the one bearish indicator we have this week, with RSI fading. Price action appears to be bought in this low area here, noted with the wicks above 215 down to about 208. However, we do see volume above average, suggesting institutions have been taking profits off into strength. MACD is trying to cross which leaves us a bit cautious going into the last 3 trading days of the first quarter. Producing a larger snapshot of the markets, looking at the New York Stock Exchange, over 2,700 stocks trade. We do have a green histogram bar. We briefly moved below zero line last week. This is showing improvement in the number of stocks making new highs versus new lows. We also had the New York Stock Exchange advanced decline bounce. We do have an extended trend line that, if broken to the downside, would create more caution on our end. So we're looking for a continuation of this trend in the New York Stock Exchange advanced decline. More advancers than decliners going into one of the seasonally strongest months of the year. Last week we reported that breadth was deteriorating back below the zero line. We've seen a reversal since then on all of the indices: big cap S&P 500, mid caps, small caps, and the Nasdaq 100 in the lower panel. Not overbought, showing improvement, exactly what we want to see. Looks like we could see a follow through. We're bouncing at this level, so an improvement in NIMO to start the week is something we'll be watching for. Coupled with a green signal on the VIX, this 60-minute time frame we'd like to see stay green so we can forecast higher highs and higher lows to continue. As the VIX closed below 20 this week, going into the last 3 trading days of this month, we'd like to see VIX head towards the red zone, something we haven't seen since before COVID hit more than 13 months ago. The bond stock ratio between the 10-year and the S&P 500 in the lower panel is bullish for equities as this drops, while the ratio between the S&P 500 and the 30-year bond moves higher. That's bullish for equities as well. That crossed over back in October, November of last year. Still on a bullish trend. While junk bonds and high yield corporate debt push higher, building this volume by price support resistance zone. If we move above, that would be bullish. If we move lower, that would be bearish for equities. For now, we're more bullish than bearish. And while equities are favored over bonds, we do see the investment grade corporate bond ETF LQD. Looks like they're starting to base. We talked about this on Wednesday or Thursday last week. The longer term trend, MACD 1939 duration, is crossing over. That could be signaling a potential bullish trend over the next few weeks if this base breaks out and price action moves higher. As a side note, we have seen bonds, LQD in particular, moving higher together with the S&P, so that's not a signal in itself. So just something to watch going into the second quarter. The US dollar continues to ramp higher as well. Broke above the 50-day moving average several weeks ago, and last week on Thursday, Friday, it pierced the 200-day moving average. RSI is still rising. MACD is above its signal line, and stochastics is above 80. And with the strength in the US dollar, other forex pairs like the British pound are underperforming the US dollar, have moved below the 21-day moving average, and continue to move in a more bearish descending pattern. While additional forex pairs like the US dollar, Japanese yen, US dollar is breaking out, showing that relative strength, which is bullish for US equities as money flows out of international ETFs into the US markets, providing something of a tailwind if that continues. While that strength in the US dollar means that there's less dollars required to buy the same amount of gold, gold continues to move lower in this descending channel, moving sideways for the last 3 weeks and below all of the moving averages. RSI still below 50. Copper, on the other hand, less impacted by the higher dollar, as you can see, moving sideways, more impacted by the global economic activity, particularly in construction and those related names and industry groups, as we saw last week with the outperformance of construction, home builders, and home improvement names, while crude oil for the last 3 weeks has been fading. But note the last 2 weeks that we have buyers stepping up near the lows of the week, pushing prices back above 61. So if crude oil continues higher, that would be bullish equities, and opposite if crude oil breaks down further. Sector rotation continues. We're seeing strength in consumer discretionary, home builders, media, retail, food and beverage, energy backed off a little bit last week. Also seeing strength in aerospace and defense. Those sectors showing up on the relative rotation graph. These in the upper half are what we want to focus on, with technology, pharmaceuticals, consumer discretionary, healthcare, consumer staples, real estate, and utilities performing the best, while international markets are mixed. Given the strength in the US dollar, money will be flowing out of international markets over the last week into perhaps the US markets. Watch for international markets maybe to strengthen this week if the dollar manages to pull back from the 200-day moving average. That could mean strength in some of these international ETFs that we'll look at. ACWI, that covers the entire global market. Argentina, below the moving averages. Chile, above. Emerging markets, below in a descending pattern. You can see the volume on Friday. This could be starting a trend break. Many of these look good. Ireland's breaking out. Australia, Canada, above the moving averages, bouncing. Sweden, so far so good. Some of the European names like Germany, Italy, all are trending. So these are areas where you can put money to work as well. Doesn't necessarily need to be in U.S. equities. Japan, Switzerland, Netherlands, Spain, sideways range, France, Singapore, Taiwan, United Kingdom, and so on. Back to the U.S. sectors. This is the weekly charts. Real estate, strong, moving higher this week as well, most likely. Transports breaking out. Materials, very strong last week. Steel, copper. Communications pulling back. That's Facebook, Netflix, Disney, Charter Communications, Fox, Viacom. All of those stocks made multi-week runs, looking like we'll see some weakness in those names. I see Prism was taking some shorts on Viacom last week. Energy, looking for a bounce. These are weekly charts again. Financials, looking for a bounce. These are improving after pulling back for a week. Industrials, breaking out. Technology, looks good, consolidating. Consumer staples, breaking out. Utilities, healthcare, with home builders outperforming as part of the sub-industry groups from consumer discretionary. Many of them look good into the first half of the second quarter. After going through the IBD 50 list and stocks that showed relative strength, again from IBD, I was shocked to see all of the financials that showed up in this scan where we look for stochastics oversold below 20 and turning higher, MACD about to cross or having crossed, and RSI moving up through 50 with price action reversing off of a recent pivot. When you look at these, you can see the number of financials were just off the charts, literally. So many financial names, many of them banks and asset managers, insurance, all looking very strong and certainly worth a look. And considering the strength in regional banks, the large money banks, one way to play this also is to buy KBE or KRE. Looking for a follow through. RSI is back above 50. Price is above the 9 and 21 day. MACD is turning. Stochastics is oversold and moving higher. Volume increased on Friday. So this is certainly a way to play the banks without having to pick the exact name that's going to outperform this week into the seasonally strongest months of the year. In addition to strength that we saw in semiconductors, ASML, nice follow through. I wouldn't chase it up here, but I would use it as a barometer to follow some of the other semiconductor names like Applied Materials, stocks like Micron, which are right near the value area, the 21-day moving average, having pulled back below the 50-day. Buyers showed up 2 days, Thursday, Friday. Stochastics oversold, turning higher. MACD is about to cross in the next week or so. RSI back above 50. Price gets above this volume by price band, we should be seeing 52-week highs again. While that's bullish, I'm also thinking that this could be a double top or left shoulder, head, potentially a right shoulder. So we need to see the Nasdaq 100 also breaking back above the 50-day, if you recall. IBD 50 stocks, QFIN 360 Finance at the 50-day moving average, stochastics almost ready to turn. ABCB, Amerisource Bank, looking for stochastic continue to point the way, bouncing off the 21-day. Home, consumer discretionary, also looking good. ATKR, stochastics oversold, looking for it to turn and follow through. Avery Dennison and Berry Plastics moving higher. Sam Boston Beer turning up. Note the stochastic in each one of these. CCS Century Communities, real estate looking good. Charles Schwab, asset managers, brokers, Cowen also turning. John Deere looks really good off the 21-day. ENTG, a little bit extended, but it looks like it's going to break out. FTNT, we looked at the flow last week on this one, bounced near the 50-day, following through, looking very strong. Volume increasing, stochastics turning, RSI back above 50. GFL, Environmental Holdings, looks good, nice trend, not an expensive stock. Volume increasing, MACD crossing, stochastics rising, RSI above 50. Century Communities from the real estate group bouncing off the 50-day, volume increasing, stochastics turning. MACD looks like it's going to turn as well. Once again, the builders outperforming. LGIH is occasionally on the IBD 50. DR Horton breaking out. Lennar looks good. Check your favorite home builder. They all look strong. Home Depot, Lowe's also breaking out last week. John Deere in the industrial group, those look strong this week as well. Volume increasing. Institutions are being a little sneaky here. Stochastics turning. Floor and Decor from the construction products related names, those are all looking very strong as well. Volume increasing. Stochastics turning. MACD above its signal line. Fortinet with the bounce above the 50-day. RSI turning. Volume increasing. You can see how all of these are moving higher. Generac Holdings, nice bounce. Good entry area. Descending wedge into the 50-day. Volume increasing. Looking for a follow through. Stochastics rising. I was talking to an agent to install solar panels on my new home. They use Generac's wall battery system similar to Tesla's and propane backup generators. Looks very strong. Green Brick Homes, Green Brick Partners, a single family home builder, owns property in Atlanta and the Dallas areas. Looking like a descending pattern, headed for a breakout. Volume was above average on Friday. The home builders in general look very strong. Looking for a push to 52-week highs. Hillenbrand looking for a bounce. We got that on Thursday into Friday. Closed back above the 9 and 21-day. RSI rising. Ingersoll Rand looking for a follow through after the bounce that we saw on Wednesday, Thursday. Volume starting to increase again. Stochastics rising. MACD about to turn. In the industrials industry group, sells pumps, flow control, and various other equipment. JCOM, Global Communications, also bouncing. This has been on the watch list since this area back in here as we started the new year. Looking for a follow through and a continuation of the prevailing trend. Landstar in the trucking industry group. Transportation and logistics services in the U.S., Canada, and Mexico. Note the earnings increasing, looking very strong. Institutions continue to add to their portfolios. We got earnings in 24 days. Louisiana Pacific continuing the trend that started in November, following through. MDC Holdings in the Home Builder Group also close to the 21-day. Looks like we could get a nice follow through, maybe about 4 or 5 points on this one. RSI, Stochastics, MACD all turning. Marine Max deals with used and new boats and equipment, related services in the Consumer Discretionary Group. Monolithic Power in the semiconductors, they outperformed last week. PTC in the same industry group as Autodesk provides 2D and 3D automation, CAD, and related software. PayPal looking for a bounce that moves back above the 21 and 50 day. I'd be very interested if it got above the 50 day this week for a swing back up to recent highs. Polaris Industries also in the stocks scan that finds stocks with growing profit estimates. Manufacturing all-terrain recreational utility vehicles, snowmobiles, replacement parts, and accessories. Note the sales and earnings growth while institutions continue to add to their portfolios. Scott's Miracle-Gro from last week. This one's just getting started, breaking out of this handle or consolidation zone. Look at the volumes picking up. Stochastics MACD looks good. RSI is rising from previous watch lists. T. Rowe Price outperforming as more millennials take on new jobs coming out of college. Look for this to follow through. T. Rowe Price has a lot of good funds that many corporations use in their 401ks. It's also an indication of strength in the markets. Taiwan Semiconductor, while it's below the 50-day and the 21-day, we're looking for this to move back above the ladder as Micron and other stocks in the semiconductor group continue to outperform. Tempur-Pedic riding the trend of outflow from the major cities to the suburbs, the home building market. UFPI in the lumber and composite wood, building products, retail, construction, looking for the breakout. Nice earnings last time around, they beat by 67%. Sales and earnings continue to increase, like that of Weyerhaeuser and Louisiana Pacific. Look for a trend continuation. MACD Stochastics both turning higher. Maybe some nice day trades there. And Wayfair also riding the trend of housing. Looking for this trend to continue. Yeti from previous watch list looking for this range to break out, while RSI, Stochastics, and MACD all turn higher. Zebra Technologies makes thermal and thermal transfer printers, encoders, and dye sublimation card printers, all looking good. Zebra looks like this descending channel is going to break to the upside. Stochastics and MACD are turning. Stocks from the rising profit estimates group from IBD also looking good. Many of these most likely will follow through. This pullback recently in Stochastics setting up some nice follow-throughs. LGIH, that's a nice home builder, and Williamson Sonoma after earnings. Gap and Go looks like a follow-through. These are stocks from the relative strength scan. Also stocks that showed Stochastics turning below 20 and rising with RSI moving above 50. All of these look really good. This scan produced like 170 candidates. If you don't find your stocks that you've traded recently on this list, I'd be very surprised. Many of these look very strong, looking for a follow-through. CB Richard Ellis, office, real estate, and REITs. Chemours following through. Citizens Financial. Most of these are banks and related names. Cummins International, engines, truck engines. Cheniere Energy. There's so many names on this scan. Just pause the video and check these out for next week. Many of the stocks that are on the opening monologue all set up similarly. FleetCor, so many banks, so many banks. Look at stochastics. All of these oversold. Looking for follow through. Coming into this week. Micron looks really strong. ODP, Office Depot. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com this March the 28th, 2021. I'll send out a watch list later tonight around 11:30 on the East Coast, 8:30 on the West Coast. Be sure to check that out in your inbox. I hope this helps. Take care, and I'll talk to you soon. Ciao.